So now back to the BRICS. They replicated the World Bank. They replicated the IMF. Now they're coming out with a new currency, Forex currency. Now, here's where it gets really interesting. And I tell people, I said, if you want to understand this, it took me a long time to figure this out. I'm just like slaving over. But I said, if you want to understand this, you have to stop thinking like an American. You have to start thinking like a Russian. This is the kind of thing that pretty much only Russia could come up with. So what is the BRICS currency, Ken, by the way? I don't know if they're going to call it a brick. I'm saying brick for convenience. Doesn't matter what they call it, but just call it a brick. But for the time being, but they'll come up with a name. Who knows? The value of the brick is not determined with reference to any other currency. It's determined with reference to gold by weight of gold. I don't know the way they'll pick one. But again, it doesn't matter because now we're back to Aristotle's transitive law. This is the key. This unlocks the whole thing because Aristotle said, if A equals B equals C, then A equals C, the B can drop out. It's not even arithmetic, it's logic. It's called the transit buoy. I'm certain that Aristotle invented. If any Greek scholars know under all your source, let me know. So what the BRICS had done is they have dodged the biggest bullet. The thing that caused Britain was ultimately to fail. The thing that potentially stands in the way of all this, they define their currency by weight of gold. Now, a weight of gold has $1 value, right? So A equals B equals C1 brick equals 1 could be an answer. Kilo doesn't matter. You call it an ounce. 1 brick equals 1 ounce of gold equals today, 1970. Well, through the transitive law, dropped out to be 1 brick equals 1970, $1,970. But that's constant. I mean, that logic works your moment in time, but it's not fixed. Because the price of gold is going to fluctuate daily, minute by minute, right? So what's going to happen is the dollar gold coin exchange rate, the dollar price of gold. So the LBMA, the COMEX, the London Metals Exchange, JP Morgan on allocated forward contracts, the whole huge gold market in dollars is still going to exist. In fact, of the BRICS, wanted to exist. And if I could just digress for 1 minute, I've never seen an international monetary economic problem that has created more confusion, I want to say misinformation, as a little tripod. Just confusion or maybe deliberate hyperbole than this. Because let me tell you what this is not. I'm going to tell you what it is. But it's important to know what it's not. This is not the petro yuan. This is not the petro ruble. This is not a gold-backed yuan. This is not a gold standard. This is not the end of the US dollar. It's not the end of the euro. It's not the end of the world. It's not any of those things. But that's what everyone's running around on websites or whatever, shouting, it's none of those things. In fact, quite the opposite. And this Russian mentality comes in. The BRICS want the dollar to be around. They want the dollar gold market to exist. Because they get the free ride, the dollar has to do all the dirty work in the gold space, and BRICS get the free ride by declaring 1 break equal to a weight of gold again. Weight's the key. They slip the dollar gold market go wherever it goes. And the brick is worth an answer, whatever kilo, whatever. And yeah, the dollar equivalent under the transitive law changes, but they're not pegged to the dollar. They're not fighting that fight. In other words, the BRICS gets a free ride on the dollar gold system, and they want that system. They don't want it to go away because they get the benefit of a gold value. Now think of what the BRICS don't have to do in the scenario. They don't have to buy gold. They don't even have to own gold. They do. But no one in the world has enough gold to back up currency. This currency, the brick, will not be redeemable into gold. And maybe there's a dealer somewhere will take it. That's between you and the dealer. But if suddenly you're going to be able to march down to the People's Bank of China with a pile of bricks and say, give me the gold, they're not going to do it. So it's not redeemable. They're not going to make a market. They're not going to maintain a value because they don't have to, because it's by weight. They just get to sit back and piggyback on the dollar gold system. Let the dollar do all the dirty work with one twist. And here's the Russian contribution buy. So you'd have to close your capital account when you close it, open it, whatever you want to buy gold. You have to make a market, You literally need that much gold. You just say this is the ultimate fiat currency. We're failing, and that means I say so. Well, they say so when they were just basically, this is a bet. This is a bet that the dollar is going to collapse against gold over time. And I think that's a very good bet. This is not a 3-month forecast. I'm not saying gold is going to go up or down the next week. Who knows? But over time, now we're into what debt to GDP ratios, annual deficits. Dare I say monitor airy theory? I mean, all these ideas are ruining the dollar, and everyone can see it, but not yet. And so if you want to launch this new currency and you say, hey, long term, the dollar is going to collapse in terms of gold, I'll hook my horse to this wagon called gold by weight, and I'll just read the benefits, and I don't have to do a thing. And so that you're defining it by weight. So the dollar gold market goes where it goes, but you don't really have to worry about it because you're your anchor to wait. But here's the twist. And this is how it's going to play out. Now you're the United States. You looks like me painted into a corner. What can I do? Well, one of the things you could do, I've told the Treasury this for years, and I'll listen. I mean, they invite me, don't listen. One of the things you could do is buy gold. But what happens when the United States buys gold, the dollar price of gold goes up, and the brick gets stronger, and the dollar gets weaker. Checkmate. In other words, the US is now in a box where you can't even get out of it by buying gold, because you're gonna weaken your own currency relative to gold in the process. And the BRICS are just gonna sit there and not lift a finger. So it's genius. I gotta credit the Russians. I'm not saying the Chinese couldn't think of something like this, but this has got Russia's fingerprints all over it. Okay, people have been talking about this for 20 years, the great reset at the end of the dollar or the collapse of the dollar, gold to the moon. And it's never played out. And the reason are some of the ones, which is the dollar has these huge embedded advantages in the form of its reserve currency status. Not because everyone loves the dollar or they even love United States, but because we have the only bond market big enough to absorb global savings. The US Treasury market is huge. It is liquid, but it's got a whole infrastructure, primary dealers that bid at auction when issue trading settlement clearance, futures, hedging options hedging, depository trust corporation settlement, on and on and on. It's got this huge infrastructure of laws, rules, and regulations that they've been building for a long time. I was faced with to undo that, 37 years since Alexander Hamilton. But above all, it has the rule of law that people just trusted died, like the dollar. Don't have to like the United States, but you trust the market. The US, in response to the war on Ukraine, broke the trust. They froze US Treasury assets of the Central Bank of Russia. Unprecedented. And I'm a sanctions expert. I work for the intelligence community. He was part of what I did was look at sanctions and the CEPHIUS and a lot else. And as far as I'm concerned, I think I know that our Brooks friends agree. That's the default. Maybe Sampei would call it a selective default. But Russia made the money. They bought the treasuries. They're entitled to principal and interest. And we're saying, no, you can't have the principal, and it's just we're not paying you. Well, that's the default. I don't care how Janet Yellen must dress it up. And it was a shock. But worse than that, everyone else in the world was watching Saudi Arabia, India, Brazil, Malaysia, and they're saying Turkey and others, and they're saying to themselves, what if the United States doesn't like what I did? What if they don't like my policy? They're going to freeze my treasuries. Well, until a year ago, he was saying, of course not. They would never do that. Well, they did in the case of Russia, and they will potentially in the case of these other countries. So that was the catalyst, the idea of getting out of the dollar. Yes, it's been around a long time. The feasibility of that was limited, kept really by the absence of a bond market big enough to absorb global savings. But now the country is just saying, well, what good is it to have my savings in treasuries if you're just going to steal them? So maybe I'm not saying Berkshire wonderful out of the gate, but at least it's not dollars. At least it's not maintained on a digital ledger at the US Treasury. And at least you can't steal it. And so that was the catalyst that drove this thing from a 17-year project to, hey, warp speed. Let's get it done. How do we do it? And there we are.